Hello, everyone. Today is July 1st, 2024, and this is the Northbound Wealth Podcast with your host, Brent Foster, CEO and founder of Northbound Wealth Management. Thanks for listening. Here's the headline: Mixed message from Fed Chair Governor. We're going to dive into that. But first, stocks finished the last week of June and the second quarter mixed as investors digested a fresh round of economic data. The S&P 500 slipped 0.8%, while the Dow Jones Industrial Average also dipped 0.08%. The tech-heavy NASDAQ composite gained 0.24% for the week. The MSCI EAFE index, which tracks developed overseas stock markets, rose 0.27% for the week through Thursday's close. NASDAQ regains the lead. Last week opened up with the S&P 500 and the NASDAQ heading lower, while the Dow rallied on momentum from the prior week. But by midweek, the leadership shifted, with the NASDAQ pushing higher. With the back half of the week packed with fresh economic data, conflicting stories developed about the economy. New home sales fell 11.3% in May, the largest month-over-month drop in a year and a half, while the supply of new homes hit a 16-year high. Meanwhile, first quarter GDP revised slightly to 1.4% higher, and durable goods increased in May. Friday's personal consumption and expenditure, which is the PCE data, showed that core inflation slowed 0.1% in May over the prior month and 2.6% year over year, its lowest annual rate in 3 years. Both figures were in line with expectations. Stock prices initially rallied on the upbeat inflation news, but the early gains faded as the trading day progressed. And on my blog, I've got Y charts, weekly market insights, kind of some of the data there, major index returns summary. Dow Jones, let's see, year to date is up 4.91%. The MSCI EAFE index is up 5.71%. The NASDAQ's up 19.4%, and the S&P 500 15.75% year to date. Not bad on performance. We'll take it. And I've got a chart of the S&P 500 kind of showing where the close was at the end of the week there. And looks like we're sitting right around that 5460 level, which, by the way, had beaten so many of the price targets of so many of Wall Street banks and investment firms that they had to revise up what they think is going to happen. We'll see. I wonder if we're going to hit 6,000 on the year, back into the year here in the third and fourth quarter. Potentially could happen. I'd be a little surprised of that, but it very well might happen. It may happen at the beginning of 2025. We don't know. We'll see. 10-year note, the 10-year Treasury note, latest value was 4.36%. 1 month ago, it was at 4.54%, so it's down from about a month ago. So there's been a bit of a backup in rates and yields, and that's because the Fed is kind of indicating that they'll not be raising anymore, but we'll see. Divergent speakers, that's the headline. Federal Reserve officials have worked to communicate that despite the progress made on inflation in recent months, it remains above the Fed's 2% target. Last week, Fed Governor Michelle Bowman surprised the markets when she indicated, quote, "I remain willing to raise the target range for the federal funds rate at a future meeting should progress on inflation stall or even reverse," end quote. The Fed Chair Powell, scheduled to speak on July 2nd, which is tomorrow, told investors on May 14th, quote, "I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike," end quote. So, divergent speakers. This week, key economic data, ISM Manufacturing Index, construction spending. That's today. We haven't gotten that data yet, but we'll be tracking that. Tuesday, Fed Chair Jerome Powell speaks. Motor vehicle sales in the JOLTS report. Wednesday, jobless claims, international trade in goods and services, FOMC minutes get released. And then Friday, employment situation report, Fed balance sheet reports as well. So we'll be tracking that economic data for you and trading accordingly and managing money accordingly. Notable companies reporting earnings. We've got Wednesday, Constellation Brands. Friday, Calvista Pharmaceuticals. And that's about it. Kind of light on the reporting front for notable companies. Tax tip of the week: think about credits and deductions now to prepare for filing. I know it's always going on, right? Taxes, always planning, always thinking. Here are a few facts about credits and deductions that can guide you through your year-round tax preparation. Taxable income remains after someone subtracts any eligible deductions from their adjusted gross income, including the standard deduction. Some taxpayers may itemize their deductions to reduce their adjusted gross income. The Tax Cuts and Jobs Act changed itemized deductions. In comparing these changes, many individuals accustomed to itemizing may find it more beneficial to take the standard deduction because it's so high. Generally, if a taxpayer itemized deductions are more significant than their standard deduction, they should itemize. Depending on the situation, some taxpayers may even be required to itemize. Taxpayers can subtract tax credits from the total amount of tax they owe. To claim a credit, taxpayers should keep records demonstrating their eligibility. Some major tax credits include the Child Tax Credit, the Child and Dependent Care Credit, the American Opportunity Credit or Lifetime Learning Credit, and the Earned Income Tax Credit. This tip is not intended to be a substitute for specific individualized tax advice. We suggest that you discuss your specific tax issues with a qualified tax professional, and this tip was adapted from irs.gov. All right, we've got a good show for you. Stay tuned for the next segment. So I just wanted to share that U.S. weekly jobless claims have drifted lower but are still high, potentially affecting Fed rate decisions, so whether or not they cut. Important points to notice are the employment boost. The decrease in jobless claims has not greatly affected overall claims numbers. Economic health, the jobless claims and other factors can be an indicator of economic health. Labor market trends, understanding these trends can help in planning and forecasting for businesses and individuals. And the Federal Reserve impact. This data can influence the Federal Reserve's decisions on monetary policy. Stay informed on how labor market trends can shape the economic landscape. Home prices are starting to cool as active listings jump by 35%, signaling a shift in the housing market. Important takeaways for consideration are: listings rise. A 35% increase in active listings is providing more options for buyers and cooling off price surges. Buyers benefit. Cooling home prices may create more favorable conditions for potential buyers. Sellers' strategy. For sellers, understanding these market dynamics is crucial for setting competitive prices and expectations. Staying updated on these trends can help you make more informed decisions whether you're buying, selling, or investing in real estate. How do you think this surge in listings will impact the housing market in the coming months? You can respond to that on socials, or you can shoot us an email at info@northboundwealth.com. info@northboundwealth.com. June 28th marked National Insurance Awareness Day. It's not exactly a date everybody has on their calendar. I'm aware of that. That's why I'm talking about it. But here are a few tips to keep in mind. Number one, periodically review your life insurance. As your wealth grows, it may put more demands on your life insurance coverage. Does your policy adequately reflect your current net worth? Would it support your family's lifestyle in the event of the unexpected? Remember, several factors affect the cost and availability of life insurance, including age, health, and the type and amount of insurance purchased. Any guarantees associated with the policy are dependent on the ability of the issuing insurance company to continue making claim payments. So keep that in mind. But number two, check your umbrella liability insurance. These policies extend over your existing limits and coverages provided by other policies, such as your car and homeowners insurance. Much like life insurance, the cost and availability of an umbrella policy will depend on a variety of factors. Any guarantees associated with a policy are dependent on the ability of the issuing insurance company to continue making claim payments, but check that out. Number three, don't overlook disability insurance. One of your greatest assets is your ability to earn an income. Disability insurance can replace a portion of your income if you become unable to work due to a covered illness or injury. A financial professional may be able to help you compare different policies because not all policy types and product features are available in all states. Remember, any disability obligations are dependent on the ability of the issuing company to make claim payments. And number 4, consider insuring your valuables. You may have unique valuables from fine art to jewelry that require specialized insurance coverage. Okay, so there's your personal finance tip for the week. This article was posted on the 30th of June by the Daily Upside, written by Isabel Asher Hamilton. And I feel like I should share it with the audience because we can all learn something about artificial intelligence, AI, and then also the demands on our ecosystem from an electrical standpoint. And also maybe keep in mind some investment opportunities as we go through this article. I think it's very informative. So let's dive in. Generative AI is the future. It is also an energy glutton. That's potentially bad for our future. Training and running AI systems takes a heck of a lot of compute power, and compute power needs energy, mostly in the form of electricity. The International Energy Agency predicts electricity consumption from the data centers could double from 2022 to 2026 to 1,000 terawatt hours, roughly the same amount of electricity consumed yearly by Japan. It's another big infrastructure challenge for big tech. The energy it needs to realize its AI dream simply does not exist. The industry has overcome its infrastructure challenges before. Google, Meta, Amazon, and Microsoft has spent years laying subsea internet cables as data highways. But setting up new energy sources takes time, which is frustrating for an industry that is used to moving fast and breaking things. Still, big tech is pitching in and trying to grab as much forward capacity as it can. And as electricity becomes scarcer and scarcer, companies will be competing not just with one another, but with everyone else who wants to turn on a light bulb. Hungry servers. So although an IEA has had to go at quantifying how much more electricity the AI sector will eat up in the next few years, it's extremely hard to know what the upper limit will really be. Deborah Perry Piscone, a former Silicon Valley VC, told the Daily Upside that it'll be a few years until the full scale of AI's energy demand really comes into focus. She added that in the US, electrical grid is not equipped to deal with any massive extra load. She said, quote, generating the power is one thing, and then the distribution is something totally different, end quote, she said. Evan Carone, co-founder and chief information officer at climate tech and energy transition incubator Montauk Climate, agreed that it's very hard to know exactly how high the energy demand from AI might climb, adding that it particularly depends on whether the fervor surrounding the technology persists. This week showed that investors' enthusiasm for AI is not bottomless, as Nvidia lost over $550 billion in market cap over a 3-day period. It's still like over $3 trillion in market cap, though, guys. But even as investors cool on AI, which I don't think is actually true, they might a little as they understand it a little more, but the tech companies that want to be players in the AI space are already thinking years ahead to shore up the energy they'll need for data centers, pouring billions into deals with energy companies and utilities. For example, Microsoft reached a deal with Brookfield Asset Management, which is one of our investments. Actually, we own that as a firm last month, to inject about $10 billion into renewable electricity projects. At the end of May, Amazon, Google, and Microsoft all signed deals with Duke Energy, proposing new energy tariffs to develop clean energy sources in the southern United States. Earlier this month, Google agreed to partner up with Nevada utility company NV Energy and Warren Buffett-backed geothermal energy startup Fervo Energy. The nuclear option. Microsoft and its partner, Sam Altman, the tech CEO du jour who heads OpenAI, obviously a company most people have heard of, OpenAI, that is, have been particularly bullish on nuclear energy, investing in companies that promise to make small modular reactors, a new kind of nuclear power plant that's theoretically smaller, faster, and cheaper to build. SMRs, as they're dubbed, have yet to prove themselves as a viable part of the energy supply chain. However, none of the big tech companies have managed to get much of a head start on capturing forward capacity, Carone told the Daily Upside. They're all scrambling for megawatts, he said. He predicted competition for energy hookups will only get hotter, adding they are going to be fiercely competitive on acquiring electrons and molecules of natural gas, and I think personally they're going to try to get it from any source they possibly can. Keep that in mind. There's already evidence to suggest that AI energy demand is giving the fossil fuel sector, which is supposed to reach its peak demand by the end of the decade, a little boost. Microsoft emissions climbed almost 30% from 2020 to 2023. And U.S. coal concerns are stretching out timelines for ramping down their operations in response to the demand. Both Carone and Piscone said they believe the AI boom will hamper global targets to wean ourselves off climate-damaging fossil fuels. Less than friendly competition. So, as big tech signs more and more deals with energy firms, electricity will become harder to come by, Carone said. Resource constraint is the name of the game, he told the Daily Upside. There's even competition for AI compute power within these tech companies. Bloomberg reported earlier this month that teams at Google's DeepMind unit, focused purely on research, have a tighter compute supply than teams focused on more commercial applications. But big tech firms are still competing with anyone else who wants to build something, for example, houses, schools, and hospitals. The waiting lists are pretty long too, as getting a new power station online and feeding into the grid is a pretty lengthy process. There's a physical limitation on how much can be built and when, Carone said, adding, despite the increase in demand, the supply chains have not changed material over the last couple of years. Even demand for data centers pre-AI boom was driving this kind of competition. The Financial Times reported in 2022 that developers in West London were facing a ban on building new housing until 2035 because of a blossoming of new data centers in an area that had maxed out the grid's capacity for other housing for the next decade. With AI in the picture, residential competition could get more dire. Piscone said, it could really lead to the supply-demand imbalances, especially in regions with limited energy infrastructure or where AI development is concentrated, she said. It absolutely is going to impact and hamper economic development in some regions because data centers end up snapping up most of the spare capacity in areas with constrained transmission or generation, and it could make it harder or more expensive for new homes or businesses to secure the power connections they need. When it comes to signing deals with energy utilities, there's no prioritizing the process. If you have the money, then it's first come, first served. Everything's electrifying. It's all competing, Carone said. Right now, a good political question is, if a hospital and an elder care facility ask for an interconnection at the same time as Sam Altman's OpenAI data center, who wins? Right now, it's Sam Altman's OpenAI data center because they have more money. Regulation stations. So what happens when a crucial resources demand outstrips its supply is a big, dark question mark over the future of electricity. We're in a place globally where energy was getting cheaper and cheaper and cheaper because of renewables, Carone said. I fear that it won't be the case for the next generation. Policymakers have been eager to talk about how to regulate AI's output, the disinformation, the spam, the copyright issues, but there has not been a lot of discussion about its energy guzzling. Piscone said if the U.S. wants to maintain its pole position as a leader in AI, policymakers need to get involved in preparing the nation's infrastructure. I do think a lot of the onus is going to fall on the chip makers, working and figuring out something with big tech companies with a subsidy from the government, she said, warning that it's going to be a massive battle working with policymakers, i.e. politicians. Crone thinks multi-stakeholder cooperation and fast top-down policymaking will be key to managing any kind of orderly transition. He believes it's possible that energy market regulation could include remedies as moratoriums on new interconnections for AI or laws that give prioritization to critical infrastructure over data centers. I think the genie's out of the bottle on AI, Crone said. I feel like it's moving towards the dystopian versus the utopian, I think, but it's on a knife's edge. It could be very utopian if they figure out how to do it. Thank you, Isabel Asher Hamilton. Well done on this Daily Upside article. I found it very informative. You can go to dailyupside.com and subscribe if you like. And just want to thank you for that contribution. I wanted to take a few minutes and go over financial strategies for women. So go over just some key concepts, some statistics. Key takeaways from this piece: despite sharing money management duties, only 19% of women feel very confident in their ability to retire comfortably. Compound interest may be one of the greatest secrets of smart investing. That goes for men and women. And time is the key to making the most of it. So the earlier you start, the better. If you have left your long-term financial strategy to chance, now is the time to pick up the reins and retake control. So here we go. Nearly 60% of women take sole responsibility for making investment decisions, yet only 19% of women feel very confident in their ability to fully retire with a comfortable lifestyle. Although more women are providing for their families when it comes to preparing for retirement, they may be leaving their future to chance. Female investors thrive and often outperform their male counterparts. Women in college. The reason behind this disparity doesn't seem to be a lack of education or independence. Today, women are more likely to go to college than men. So what keeps them from taking charge of their long-term financial picture? One reason may be a lack of confidence. One study found that only 48% of women feel confident about their finances. Women may shy away from discussing money because they don't want to appear uneducated or naive and hesitate to ask questions as a result. There's insider language. Since Wall Street traditionally has been a male-dominated field, women whose expertise lies in other areas may feel uneasy amidst complex calculations and long-term financial projections. Just the jargon of personal finance can be intimidating. 401k, 403b, fixed, variable, all of that stuff. To some inexperienced in the field of personal finance, it may seem like an entirely different language. There's a lot of IRC tax code language in there. That's where section codes 401k, 403b come from. But women need to keep one eye looking towards retirement since they may live longer and could potentially face higher healthcare expenses than men. If you have left your long-term financial strategy to chance, now's the time to pick up the reins and retake control. Consider talking with a financial professional about your goals and ambitions for retirement, and don't be afraid to ask for clarification if the conversation turns to something unfamiliar. No one was born knowing the ins and outs of compound interest, but it is important to understand in order to make informed decisions. Compound interest, what's the hype? So what is that? Compound interest may be one of the greatest secrets of smart investing, and time is the key to making the most of it. If you've invested $250,000 in an account earning 6%, at the end of 20 years, your account would be worth $801,784. However, if you waited 10 years, then started your investment program, you would end up with only $447,712. So that's the power of compounding. So you can take the power of compounding and try to apply that thinking to a retirement strategy. So when it comes to retirement, women may face unique obstacles that can make saving for retirement more challenging. Given that women typically live longer than men, and retirement money for women may need to stretch even further. Despite these challenges, a wise strategy can give women reasons to be hopeful. Get clear on your vision and get a plan. Do you want to spend your retired years traveling? Do you envision staying closer to home or around your kids? Are you seeing yourself moving to a retirement community? Or do you want to live as independently as you can? If you're married, sit down with your spouse to discuss your visions for retirement. You can't see if you're on track for your goals if you haven't defined them, so write them down. If you do find that you're falling short of where you want to be, a financial professional can help. Here at Northbound Wealth Management, we specialize in that. Get creative with your strategy. If you expect to or have taken time off from the workforce, you may want to increase your contributions to your retirement accounts while you are working. If you're staying home while your spouse works, you may be able to contribute to an individual retirement account. Once you reach the age of 73, you must begin taking required minimum distributions from a traditional individual retirement account and other retirement plans in most circumstances. Withdrawals from traditional IRAs are taxed as ordinary income, and if taken before the age of 59 and a half, may be subject to a 10% federal income tax penalty. Traditional IRA contributions may be fully or partially deductible depending on your adjusted gross income. Look for sources of additional income. If you're caregiving for an elderly relative, there are ways to be paid for your time. The Veterans Administration or Medicaid may be a potential source of income. Working with a professional who has expertise in that specific situation or field can help you navigate your options and potentially find a way to earn income for the work that you're already doing. Keep the conversation open. One of the best things you can do is make sure that you are having regular conversations about your finances and hearing from well-informed sources. There are more resources than ever at your disposal, and working with a trusted financial professional can help ensure that you always know where things stand. While women can face many challenges as they save for retirement, careful preparation and a creative approach can help you rise to the occasion and pursue the fulfillment of your goals. As you pivot towards retirement, which can be a significant transition, it can bring both challenges and opportunities for women who've spent many years focused on their careers. For women approaching retirement age, it's crucial to consider various tips and strategies to ensure a smooth and fulfilling transition. An elegant pivot from work life to a life of one's own requires careful consideration. A woman retiring at 65 may live another 2 decades or more. That's not only a long time to finance, it's also a long time to figure out what to fill your life with meaningful activities. It's a change of identity. Retirement can change a woman's identity, especially those who have worked in the same profession for many years. Exploring new interests and finding a new sense of purpose could involve taking on a new job title, pursuing a passion, or simply embracing new hobbies and activities. But you'll enjoy your retirement more if you start thinking about establishing the new version of you independent of your career. Addressing your finances. So one of the first steps to take when preparing for retirement is to address financial matters. This includes reviewing your estate strategy, getting all the necessary documents in order, and having a contingency plan in place for emergencies and the unexpected. Consider meeting with a financial professional before and after retiring to help establish that the appropriate steps are being taken. Pivot to a new career. For women concerned about their savings or Social Security benefits, considering part-time work or working from home or starting a small business can provide income and social interaction. You have the choice here to ease into retirement while still staying active and engaged. The Department of Labor says that women are more likely to work part-time in retirement. Many part-time jobs may not have retirement plans, making it necessary to plan accordingly. Another option for women is volunteering. Many miss the engagement and challenge of the workforce, and volunteering allows them to dedicate their time to helping others while gaining personal fulfillment. Volunteering can be a way to stay connected to the community while making a difference. Now that you have the time, why not try something new? Taking classes is always also a good way for women to continue learning and growing in retirement. Many courses covering various topics are available online or in person, allowing you to explore new interests and stay mentally active. And of course, focusing on your health. Beyond addressing financial matters and finding ways to stay engaged, women must prioritize their health in retirement. This includes eating a balanced diet, exercising regularly, and getting the right amount of sleep. But your overall health includes more than just your physical body. Social engagement is also essential for happiness and health. Even for natural homebodies, spending time with others can have a positive impact. It's essential to remember that adjusting to retirement takes time. Transitioning into retirement can be a significant change for women who have dedicated many years to their careers. However, with careful preparation and consideration, women can make the most of their new phases of life by addressing financial matters, finding ways to stay engaged, prioritizing health, and exploring new interests. Women can embrace retirement as a new beginning and enjoy a fulfilling and rewarding experience. It is normal to experience a range of emotions after retirement, but these feelings will likely change over time. Being patient with yourself and understanding that it is a process may help alleviate some frustrations. If you have any questions over what to do and how to go about this, whether you're at the beginning of your journey financially or in the middle or towards the end and looking at preparing for retirement and making sure that you have the right amount of income throughout retirement, please feel free to give us a call at Northbound Wealth Management, 317-399-1107. 317-399-1107, or you can visit our website at www.northboundwealth.com. And again, my name is Brent Foster. Thank you for listening and have a great week and weekend. So long. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast.